So obviously Amazon's diversified like crazy, like all these other companies we've been talking about, all the different arms. What should we be pointing out here, Bertrand?
Three things that are driving Amazon's future. And for me, that's AWS, of course. It could justify the entire valuation of the company, arguably. Fastest growing segment, slower than it used to be. And people have been spooked a little bit by the slower growth. I think in particular, next quarter is expected to be only 20% growth for AWS based on the run rate in September. So that spooked a lot of investors. Now you have to consider that the way Amazon works is they want to focus on the customer. This is the absolute must for them. And so what are they doing right now? They are helping their business customers in the cloud segment to spend less. They are actively helping, this is important, they are helping their customers spending less on their platform so that they can retain them long-term. Everybody is trying to save money right now. And so they want to help their customers do that because they know that it will pay off down the line. So very lovely to see. I think they are making the right call here. And we have to look beyond the cycle that we're facing right now. In 2-3 years, AWS is going to maintain a healthy growth rate. They have not lost market share, right? Google gained, but Apple did not lose market share this quarter in the cloud infrastructure market. So very lovely to see. The second one is advertising, of course. Second fastest growing, 25%, very high margin. This could really turn everything around Amazon.com into a powerhouse in terms of margins. They continue really implementing new things. And so I think it will continue. And of course, subscriptions in general, I think there was a study recently, it's on my Twitter page that referred to the least likely subscription services to be that people would cut back on due to inflation is Amazon Prime. That's the least likely to be cut because why would you do that, right? It saves you money. It's very important, and it gives you all these other services that are optional, but people are not going to cut back on Amazon Prime. This is really part of our lives. Still large untapped market in Europe. So I think the potential is here. And so what you have to do, though, is to kind of like ignore or accept that margins are going to be razor thin for foreseeable future. Free cash flow is going to look ugly because they are doing all these capex, right? Investing in growth. So I wrote an article that's free about Amazon on my website, where I cover in detail why the free cash flow in question is not a concern, because they could stop investing. The only reason why they have those razor thin margins and struggle with the cash flow is because they choose to invest aggressively in their future, and it may not work out. But if you look at the past 20 years, it's been doing pretty well for them when they followed that strategy, right?
Yeah, no kidding. I mean, it's always day one at Amazon, right? Isn't that what they say? Catch all episodes of Stock Market Live on Seeking Alpha and join the conversation live every Wednesday at 12 p.m. Eastern.